The other segment which is doing well are the entire auto stocks. So the Nifty Auto Index is up close to about 1%. And here I want to highlight an interesting report which has come out of Motilal Oswal, where they've analyzed the auto companies' Q2 earnings, whether they're OEMs or auto component makers, and they've come out with 6 key trends which stands out. First one, there are signs of a rural upturn which are now visible. They're saying that the retail sales in the current festive demand were at the highest ever levels, record performance over there. Remember, this was the first normal festive season in more than 3 years. They're saying while urban growth outpaced the rural growth, towards the end of the festive season, we saw rural growth also pick up and try and catch up. So they're saying is that there are signs of a rural upturn which are now visible. The second point, the contrast between macros and micros continues to be there in developed markets. By macros, they mean the management commentary. The management commentary from OEMs continues to say, oh, there is possibly a demand slowdown, the macro environment is deteriorated. But if you look at the micros, that is the order wins, that continues to be very strong. In fact, we've seen an expansion in the order backlogs. Third, they're saying the signs of export moderation, which were visible in Q2, became far more broad-based and they gathered momentum in Q2, right? There were signs in Q1, but it's picked up in Q2. Trend number 4 is the full benefit of the softening raw material costs is likely to get reflected in the margins in the second half of the year, but this will be partly offset due to the forex impact of the forex from imports as well as other cost inflation. And finally, the fifth point, the trend number 5 that they see is that they are seeing a working capital increase, which has resulted in higher debt. And this is a point that a lot of companies are saying that we are seeing cash flows come under stress. So Motilal Oswal says that supply chain disruptions and input cost inflation have resulted in a material increase in inventory and working capital for the entire auto supply chain. This, coupled with a weaker operating performance, perhaps due to the margin pressure, has resulted in a surge in net debt, particularly for auto component companies, by nearly 60% if you compare it with the March levels. So the working capital situation has deteriorated. And finally, when it comes to capex, they're saying that the capex of OEMs has increased to about 3.6% for the OEMs in the first half of the year. This is the highest in the last many years. But they're saying the capex of auto component companies has declined. So these are some interesting, analysis takeaways from the Q2 earnings season.
All right, Reema, thanks a lot for taking us through everything that Motilal Oswal has to say on the auto pack. But let's also talk about Apollo Tyres now. This one is in focus because UBS has raised its target price. They now have a target price of $355. This is versus the $295 earlier, and they are citing the declining commodity prices that will aid the company's gross margin going forward. In fact, they also expect that the return ratios will bounce back strongly in the months to come. So last week, we spoke to Neeraj Kanwar, who's Vice Chairman and MD at Apollo Tyres. And he said that they now have a 42% share of ultra-high performance tires. They also said that they look to expand India business margin to around 12%. Listen in.
In Europe, our volumes have gone up, total volumes have gone up by 9%. But as far as passenger car is concerned, we've gone up by 14%. Also, our focus and concentration on the ultra-high performance tires and the ultra-high performance tires is doing good. Our share has gone up to 42% of our total revenue of passenger car has gone up to 42% of the ultra-high performance tires. As far as India is concerned, we're looking at India growth happening. We've been correcting our prices as we go along. As you know, raw material pressures have been there. I'm happy to say that we've also had a margin expansion in India. If you see, our EBITDA margins have gone up 12% quarter on quarter, Y on Y actually. And so we've been holding up on our prices. But all in all, I'm pretty bullish for H2 as far as India is concerned, because the government has put in a lot of infrastructure spending, and so into highways and ports, and that's really related to our segment.
Okay, that is the management of Apollo Tyres. Today, the stock is up 6%, but if you take a look at the past 6 months, the stock has seen an over 40% increase. That's the kind of move that you've seen on Apollo Tyres. But with that, it's time for a short break. When we come back, we'll discuss the market technicals. Rahul Mohinder will also be with us to bring you some of his top trading bets.